Hey everybody, this is Justin McKissick Larry with TradeMode.co. I am the creator of the TradeMode.co EA, and I'm going to show you how to use this EA and how I trade. The first thing I do, I look at the market from a top-down analysis. So let me get all the charts up closer to you so you can see what's going on currently with the current month. Okay, it's always about looking at what's going on currently with these candlesticks. Okay, everybody, currently what's going on. Okay. So to see what's currently going on with any market, you want to look all the way from left to right. All the prices all the way to the right showing you what prices currently is. So as we see in the Euro USD right here, prices at 1.03209. Right over here at the JP British pound right here, price is 1.1807. At the US Japan 140.352, and down here is at a 0.66714. Okay, so everything to the left of where price currently is the past. Okay, it's past data. What candlesticks do, they're doing nothing but basically recording where price has been in the past. So everything to the right is everything where what price is currently doing. So you notice that all these moving averages right here are still open. They never cross back over. You see like the orange is still under the blue. Orange is under the blue here. Orange is under the blue. Orange is over blue here, okay? But they haven't crossed. The reason they're like that because price is still going the direction that it's supposedly going. As we see in the past right here, looking at this pair, the Euro USD, for the monthly basis, for the month time frame, it's been a down trade. If you would have simply got in here based on my moving average strategy, you would have been in the trade. And if you would have got in here based on my moving average strategy, you would have gotten the trade. Let's look at another chart. What's this? The US, the Japan and yen. If you would have got in here on the monthly chart and just kept it open for the months, been in the trade based on these moving averages. Okay, everything is saying the same thing. Let's look at this one right quick. The British pound and the USD. Okay, look at that. If you would have got on here, kept it open, it went down. So what I'm showing you all is what's going on with moving averages. Okay, so with these parameters for the moving average, every time this orange line, which is the 8 moving average, is over or under, every time the 8 is under the 10, it's a sell. And as you see, every time it was under, it was a sell. Here, every time it was under, it was a sell. Here, when it's over the 10, it's a buy. When 8 under the 10, it's a sell. So all we're doing is looking for what direction the price is going based on the 8 and the 10 moving average, based on the way, you put the parameters in. And history is always going to repeat itself, y'all, because in the past, what happened? Every time 8 was over 10, it was going up. Right here, in the past, every time 8 was over 10, it went up. Like here, and so on and so on. So let's look at the USD. Let's look at the past. Look, 8 under 10 down. 8 over 10 up. 8 under 10 down. 8 over 10 up. Under 10 down. Over 10 up. Under 10 down. So on and so on. So if you're seeing those type of patterns, what you think is going to happen if the 8 go over the 10 here? It's going to be an up trade, right? Because that's what's been going on in the past. Just look at the USD Japan. Let's see what happened. Same thing. Look in the past. When the 8 was over the 10 and you kept the trade open and went up until 8 was under 10 and went down. Over, up, under, down, so on and so on. Look, 8 over, up, then what you think is going to happen? Exactly. It's going to do the same thing. It's going to keep repeating itself. So when you use moving averages, you basically using moving averages to trace price. It's going to trace the movement of the price and the movement of these candlesticks. Okay. So let's look at smaller time frames. Okay. So let's go to the Euro USD on a monthly time frame. So the best way to do this, based on what I've taught you already, you would just go to the current candlestick. It's the monthly. The monthly is green, so that means this is a bull. That means it's going up. As we see right here, it's going up, right? So let's look at a smaller increment. Look, it's going up, like I said, on the monthly, and on the weekly is doing the same thing. It's just showing you at a smaller time frame. Okay, let's look at another chart by the monthly. USD Japan. Look at that. Monthly is down, right? So let's look at a smaller increment. It should be going down too on the weekly, right? Voila. Look, for the last few weeks, it's been going down, right? Okay. Let's go to another time frame. Let's go to another pair, man. Look at this pair. All the way over to the right, the current candlestick for the monthly is a up trade, right? And remember, since it's monthly, it takes about 30 days before a candlestick is finished and a new one develops. So if it's going up, that means by the weekly, we should see some stuff that was going up, right? And look, for a few weeks, it's been doing that. So you looking at higher time frames and smaller time frames and increments just to see what's going on. It's going to give you live data. So if it's giving you live data of what's going on based on the top-down analysis from top to bottom, being larger time frame to smaller time frame, you're going to be able to find out what's going on with your pairs in more real time when you go to smaller time frames. So versus you get in every day. Let's switch everything to the day chart, okay? Everything day chart, right? So when the day chart, any session open, what you want to do, basically, all the sessions open in my time. I'm Central Time, and close basically at 4. So a session is going to close. The New York session is closing, then another session is going to end. Okay, so that's going to be the Japan session. Okay, but let's just say we're looking for new sessions, to see what's going to happen. So let's go ahead, make this bigger on the day, right? At the daily time frame, it says it's going down, right? Go to a smaller time frame. For the 4 hours, it's showing you the same thing. Remember, right up in here, these two show up was going down, right? But the latest one was going down. 4 hours showing the same thing. Price was going down. Look at the moving averages. Okay, 8 is under the 10. What happened when 8 is under 10? It goes down. On 1 hour, it's going down, and it's been going down. So you see how smaller increments get you in better. So imagine I'm gonna put a little line right here, about right here. So if you would have got in from basically here all the way over, that's the hour. Let's see how it looked on a 4 hour chart. You see the red line? It's equivalent to this. See what I'm saying? And to the day is equivalent to that. And we're looking at the hour, right? So let's look at it at the half an hour with it there. See, same thing. So time frames all tell the same story. It's just about how far down you go and how high you go. But you always want to do a top-down analysis, okay? So let's get rid of that object. Another example. The daily is green, right? Let's go down and see what's going on with it. Say it was going up. Now, if you see this moving average, the 8 is over the 10, so it seems like it was going up, but it like it's going down too based on what we're seeing. So let's just look at a smaller time frame and see what's going on. And like we said, it's like it was going down, right? And it is going down by the hours. So this would have been a good trade to get in to keep open by the hour. And what happened when price is underneath, it just goes down. When the 8 is over, the price over the 10, it always goes up. So this is going to allow you to be able to make a better decision what's going on with your trades. You know what I mean? What's currently going on by the hour. This allows you to swing trade like a pro. Okay. Same way here. This says down on the daily. Let's see what's going on. It's been going down on the daily. Look, right here, zoom in. 8 under 10. What that means, it's going to be going down. Look at that. It's been going down. It's the same thing, just smaller increment. That's why I like getting in on hour time frames and stuff. So you do a top-down analysis and get in like by the hour or maybe the half an hour, 15. Just depends how down you want to get in. But you get in by the hour. Keep these trades open by the hour. You put a alarm on to go off once an hour. So every hour, one of these candlesticks are going to form on an hourly time frame. And it's just gonna, alert to go off on your phone, let you know the hour is over. And as long as these moving averages are under the blue line, well, as long as the 8 is under 10, you keep the trade open. You never stop the trade until the orange is over the blue line. Okay, when it's over the blue line, when the 8 is over the 10 and a candlestick's form while it's over, you take it as a buy. You keep the trade open until the 8 cross back under the 10, another candlestick form. So let me explain what I mean by that. This is just more precise trading. When it cross right here and one candlestick form while it's already crossed, like right up in here, you take it as a buy. You would have got it about right here, rolled it all the way up, got out probably about right here. You would have caught a nice amount of pips. So let's say you would have got in about right there, got out about right there. You would have caught like, shit, that's like, how many pips is that? Let me see. You caught about almost 40 pips, about 50 pips and stuff like that. See what I'm saying? And that's pretty good. You just trading the algorithm. So let's say you would have got in right here, 8 under 10, one candlestick form while it's already crossed. You would have got in about right here, got out about right here, cut about 40 pips. Up in here when it formed, one candlestick form, you would have got in about right up in here, something like that. Kept it open. Another like what, 60 pips or something like that. And then I see what I'm saying. This is by the hour time frame too. So I mean, this is the monthly time frame, but it works on any time frame. Every time one candle, every time it crosses the spread right up here and one candle form in there, it's just when you take the trade, right? But look, I got something better. I got an indicator that's gonna tell you guys when to get in and out the trade. Yeah, I got an indicator that does that. So let me explain. Let me show you. I'm gonna add it to every chart real quick. Then you're gonna see the beauty of what I created. So there, we always allow DL imports on everything. Okay, that came up. DL import and the modifications, okay, on everything. Let me hurry up. Now look what we seeing. Okay, what we see. Oh, this one that come up. Let me put this on there. What we seeing are these arrows on the screen, right? And we wonder, well, what are these arrows doing? These arrows were made to respond exactly to when one candlestick's form during the cross and spread of these moving averages. So like I said, when the moving averages cross and one candlestick form, the trade open. Okay, so you see right here, every time it did it, you get in the trade, keep it open until another arrow come up. You keep it open. You keep everything open until the gray box telling you to get in and get out. This indicator is 100% accurate. Look for every cross and spread, and when another candlestick form, it tell you to get in. Even when the small trades that are consolidating that stop you out, like up in here, it's still correct. It's still, see right here, it's still correct. It went down and went up over, but it's still correct with the trade. It's 100% accurate. Okay, same here. Got in as a sell, keep it open. You know, right here it was a buy briefly, but look, it went back down. It's accurate right here. It was down, then it touched to get back in. It's accurate. Here, up, keep it open. It went down right there, but look, it's all accurate. So all you gotta do is just follow these moving, follow this indicator. And this is how it's gonna look. See that? That's gonna come up letting you know to take, see right here on the 5-minute chart, and that came up before the market closed. It told you as a sell. The market closed, look, and it told you to sell. Right then and there, like I told you, every time the box come up, that's what it's gonna tell you to do. And that reason that came up, because that just showed the latest trade of what was going on with that. So let me show you something else with that. So let's just go to a smaller, boom. It said buy. Look, the JPUSD was a buy. The last trade, look right here, is a buy right at the bottom. See what I'm saying? Let's look at a smaller time frame. See if we can find anything else where it was just showing. Okay, so let's go ahead and make it again. Let's go here. Let's find, look, buy on what time frame is this? This is the weekly. Boom, it was a buy on the weekly. You see what I'm saying? You see how accurate it is? Look, sell on the 4 hours or 4 hour, right? Look how accurate it was on the 4 hour. Everything is accurate. Everything is based on the algorithm. Okay. So that's basically it. What